time to focus on our tax planning. If you wait too late, then you don't have any options. No options means no flexibility, and then you can't make the moves you need to make. And you end up spending all your money on taxes if you could have reinvested those profits or that income into assets, income producing, cash flowing assets. So I want to hop into it super quick. I mean, really, we're looking at, are you a real estate professional? If you're not, that's fine, right? The only benefit as a real estate professional is that you can offset your earned income, ordinary income, portfolio income from stocks and bonds and all that with your losses from real estate. If you're already one of those real estate professionals, you or your wife, and you file that way jointly, that's a great benefit. And that's a big reason why it's really important to look for real estate projects to invest in by year end, but don't let the tax tail wag the dog, right? Always investing in good quality projects, assets, cash flow, ideally, right? Nothing you can risk your capital in, but it's about deferring tax and putting that money to work rather than giving it to the government, which I've been doing for 15 years. But if you're not a real estate professional, that's fine too. There's still ways to utilize the tax losses from real estate to offset your capital gains income and your passive income from real estate. And if you're looking at future real estate investments and you're going to be generating cash flow, like myself and a lot of other wealthy people I know, they generate a lot of income from their real estate portfolio. And as they build it over time, more and more cash flow comes in, and they're going to need to offset that cash flow with some type of tax losses. And that's where this comes in play, where investing in real estate this year, tax losses are going to be excellent. We got the big, beautiful bill signed, accelerate depreciation, mobile home parks, storage facilities, even our small bay industrial projects. We can drive a lot of depreciation from these assets in the first year of ownership. If you're buying your own real estate, you acquire the asset by the end of year end, and then in turn, you get the cost segregation study, and then you have this accelerated loss. How that flows through to our investors is it's a 1-to-1 up to a 1.5-to-1 loss per invested dollar. So that is $100,000 could get up to $150,000 in passive losses. So if you had a big capital gain or you have real estate rental income, $50,000 of cash flow, passive income coming in from real estate, then these $150,000 of losses that you generate from this investment offset that. You're not paying tax on that income you're receiving, and you can use or reinvest or live on it, whatever you want to do. Powerful, powerful strategy. And if you sold assets, that's even better, because if you have a $150,000 capital gain, your investment in the property in this year in the investment vehicle allows you to offset those capital gains that you receive from selling single family home, any type of investment property that you had. So it's important to look at all your options, right? Right now, what can you invest in to create losses? If you have income, passive income, or large capital gains, how do you offset those? And if you didn't do a 1031 exchange, or you're not getting tax credits from some other type of tax advantaged investment, this is really the only other game that I know of, or that is at least simple enough for everyone to understand, and it's legal. Look at the portfolio. How much tax are you gonna have to pay? What allocation would you like to put into real estate? Some people like the stock market more. Some people want to stay in cash. Some people are in bonds. And then other people like real estate for the long-term growth. Going into real estate, the thing that is a benefit from these passive losses, where you generate $150,000 in passive losses, that carries forward. So now if you have cash flow in years 2, 3, 4, 5 of the investment in real estate, those losses continue to offset cash flow or passive income. So you're using these long into the future. You don't lose it. They don't carry backward. As soon as you use them all up, now you're actually paying tax after you've utilized your losses. Such a good benefit, because if you look at the actual returns, tax advantage returns on real estate, that saves you, if you're in the highest tax bracket, 38%. If you're getting a 6% yield, you're really getting a 9% yield, because you're not paying tax on that. You're deferring it. And eventually you will have to, but along the way, you can use that income to go do other things, or just have a great life and not have to pay tax for a while. I'm just urging everyone, tax plan now. This will help you figure out where real estate fits in your portfolio, working with a knowledgeable CPA about getting real estate professional status, what's material participation, the amount of hours needed to actually qualify for rep status, how to use grouping activities with all of your real estate if you actively manage some of it and passively manage some of it, how that bundles deals together and how you can utilize those losses in a way that works the best for you, for your tax strategy. And then also looking at the long term of where do you want your wealth? Where do you see the opportunity? But with the tax advantages now, I think there's a place for real estate and for me as well, even as I be patient and there's not a lot of deal flow. There's a lot of looking at deals. There's a lot of underwriting and analyzing and offers on deals, but there's not a lot of transactions we're buying due to the inflated market or the valuations being not as advantageous or as lucrative as I would like. But yet, there's a handful of deals that we are buying. Off-market, very, very specific seller-motivated circumstances that allow us to buy a great opportunity without the macroeconomic market growing like crazy. It's a good discussion to have with your CPA. Look at where you're at right now. Where do you want to pay tax? Is it time to just pay tax and have that cash and not have to deal with the headache? Or is there an opportunity to put it into producing assets, income producing assets that are illiquid, takes 5 years plus, right? Plan on a longer term investment with real estate, but with the right growth, with inflation still kicking in, with debt being decent right now. We're getting some loan quotes at 5.75 up to 6.5%, which is down a point and a half than it was a year ago. So we're seeing some good long-term fixed debt options that help us drive more cash flow out of these assets. And for me, as long as you have multiple tenants where you have a diversified income stream paying your rent, then I think that saves a lot of the downside. It protects it because you can't have that one tenant that's going to leave and then you got your income stream demolished. That's why I love storage, mobile home parks, multi-tenant industrial, small bay, and that's a big focus for wealth protection on the long haul. And then you can utilize those tax benefits and you don't threaten the capital you invested to get those. Talk with your CPA, look at your capital gains, look at your income tax for this year, explore being a real estate professional if you have a spouse that is actively not working in a field and wants to participate in the family investment of real estate. If you sold an asset this year, it's very important to look at that, where it's time to figure out how to offset some of these capital gains. If you're already thinking about looking at investments to buy for real estate, why wait till next year when maybe this year you can offset a lot of those gains? Don't wait. Sit down with your CPA now, and I'll keep you updated on any new news that I have. And hopefully we got some good deal flow coming. Talk to you soon.